Well, welcome to the 2026 investment update. I provide this update every single year because I find it helpful to hear what others' thoughts are related to the investing environment, to how decision making happens, and because investing questions outnumber any other question 10 to 1 here at Fully Funded Life. And so, like many people, I like to prognosticate, just like our friendly groundhog, Punxsutawney Phil, who saw his shadow again this year. That's why we have 6 more weeks of winter. So every year I do prognostications, and what I enjoy really is seeing how good I did on last year's. And so how did I do with last year's prognostications? One of my prognostications was that interest rates would remain stable. The first one is that I believe interest rates will remain stable. Morningstar, a reputable organization, project the federal funds rate target range to fall from 4.25% to 4.50% currently to 3.50 to 3.75% at the end of 2025. That would mean at least 3 cuts of 25 basis points, 0.25% in the next year. However, I believe that is not going to happen. Vanguard and JP Morgan tend to be in alignment with my thoughts. I ask the questions: why would the Federal Reserve lower interest rates when unemployment remains low, wages are increasing, the housing market is stable, and inflation remains higher than their 2% target? Therefore, I believe that there will be no cuts, maybe 1 cut. Well, it turns out that that was a miss for me, and that Morningstar was accurate. That means I was inaccurate. However, you will see that inflation did creep up, as did tariffs. And so we will call that a solid miss on my part. I'm not bitter about it. I just like to learn from it. I also said the average residential real estate prices will continue to moderate with little to no increase in the value of the median sales price. I am carrying this over from last year. I didn't even change the wording of it. And that, my friends, was a hit over the past year. As I've shared many times on social media, if you haven't taken a moment to follow me on social media at Joe Sangl, my single item measure for inflation, the federal government uses somewhere around 80,000 items to measure overall inflation. I use one single measure as it relates to the housing market, and that is a sheet of 7/16 OSB sheathing. Question of the day: do you know what OSB stands for? It means oriented strand board. That OSB sheathing of 4x8, they use it for decking on roofs and on the exterior sheathing of houses. Right before the pandemic hit, I bought some for $7.45 a sheet. As you may remember, during COVID, it went up to nearly $60 a sheet. And in my update this year, it is selling for $15.28 a sheet. We'll check out what that is 1 year from now. It is now selling for $16.48 a sheet as I deliver this update. That's an increase of 7.85%. Now, interest rates remain at the higher end of the past 2 decades. And for that reason, I believe that there will be really no increase and really no decrease in the value of homes. I believe it is stuck. However, interest rates remain at a higher end of the past 2 decades, and so that was a hit. Housing prices, as you can see by this chart from Fred, which is the Federal Reserve, and you can see that house prices have continued to moderate. In fact, they have declined a little bit. The third prognostication I made last year, this is probably sure to tank the stock market, but prognostication number 3 is that the stock market will grow by 10%. I'm going to call that a close miss. When we recorded the update last year, the Dow Jones Industrial Average was at 42,500 and change. Now listen, when I first started looking at this in February, it was up to 50,188, but the 1-year mark, as I record it on March 23rd, is it's 46,208. The Dow has increased 8.61%. Now that's a little lower than my 10%. The S&P, well, it was at 57.59, on the day of this recording is at 65.81. That's an increase of 14.26%, which is higher than what I prognosticated. The Russell 2000, which is a collection of 2,000 companies, was 2104, and on the day of recording is 2494, which is an increase of 18.54%. So I'm going to call it a close miss. Some were much higher at the Russell 2000. One was a little lower, the Dow. If you had a good mix of it, hey, nobody's complaining about double-digit growth. Get fired up. My final prognostication, just as a bonus one, is that precious metals will grow. I believe gold will grow by 5% and silver by 15%. Well, I was correct that it would grow, but I missed big time on how much it would grow. Gold was $3,012 an ounce. Well, on March 23rd, it was $4,375 an ounce, an increase of 45%, not 5% as I thought. In fact, it got as high as around $5,400 an ounce at one point in time. Silver, when I recorded this last year, a year ago, was $32.98 an ounce. Today, recording it, it's around $70 an ounce, $68.31. That's a 107% increase. It got up to nearly $117 an ounce before coming back. So it was a big miss on the low side. So those are my prognostications. I would like you to think about what you thought would happen over the past year. And were you dead on? Did you miss? Did you hit? I am going to make prognostications a little later in this update, but that's Joe's prognostications. How did I do on my 2025 to early 2026 thoughts?